mean, I guess there's a few when you're talking about in-market barriers. I think just to Nick's point earlier, many different markets, so many different kind of sets of regulations, and to Hiran's point around complexity, it's sort of navigating each of those, which is a sort of barrier in itself, particularly to new entrants in the market. So in a market like Vietnam, you might have concerns around, are you going to be able to get your money out again, which is a sort of a critical barrier that you need to be comfortable with. Other markets, it might be more the nuances if it's energy that you're looking at around rapid changes in renewable energy tariff and market settings, and just a lack of confidence that will be consistently applied for the duration of a project. So it really does vary from market to market. And I think the overall picture goes to really pick up on, I think, Angela and Hiran's point of it's also fair to say, I think, that the risk perception for those who are not already invested in Asia is higher than those who are currently investing in those markets. And that's not just anachronistic. That makes sense because you're not in there and you're not navigating. You haven't yet made the investment to get comfortable and understand those markets, and you may not have a familiar asset manager and partner to make that step with you. And so there is just sort of this initial hurdle that once you overcome that and you start to get exposure, you can see that there's a pathway there to increasing exposure more rapidly over time. And I think so that's the sort of Asia market regulatory picture very briefly. Yeah. The Australian domestic regulatory picture is also important. Angela touched on this, but there are performance test settings in Australia that Treasury is currently consulting on to see whether they are fit for purpose for encouraging investment into sort of national priority areas, and they do influence how superannuation funds are able to think about this. I think that is one issue in Southeast Asia. It's certainly not the only domestic industry piece that I think is relevant. It's also how funds interpret their fiduciary duties to members to act and invest in their best financial interests. It's the competitive nature of the Australian superannuation market. In other pension markets around the world, there's not member choice, so you don't have to worry about your members getting up and moving over to a competing firm because they've seen that the returns are better from one year to the next, or for whatever reason. And so these dynamics play into the need to take potentially a more short-term perspective and really prioritise immediate returns, and can make it harder to make those longer-term kind of investments into new markets.